Good evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Monday, and we're at the 31st of January. Thank God, I want this month over, 2022. And I think any pro that you're dealing with out there is going to say, too much volatility, too much craziness in the market this month of January. One of the biggest declines on record in recent times in all the stock indices. I write about it in my newsletter tonight, pointing out what it did. And it saves itself, especially in the Russell, by coming back today about 2-3 percentage points. Had it not done that, it might have been on record the worst January of all time. But I think today was more short covering than anything. I think the market stepped out of its downtrend, and I think that's important to look at, and I'll show you that in a minute and why. Metals can't seem to get themselves going. Copper market, not surprised to see the big break you had here into the 430 area. I've mentioned the Chinese going on vacation. They're not buying. The trade desks are empty, and trade desks can be people that are actually buying physical copper for their factories and so on. Everybody's on the lunar holiday, the Golden Week. This is a phenomenon that takes place each year. They take off a week. They give the country a week off. And expect that when that happens, you're not getting a lot of demand. You know, there could be some business. I'm not saying that everybody has to go, but the vast majority are gone. Now add to it Omicron. I think you got most of the people out of there. In the grain market, it's pretty wild just because we're still watching South American weather and obviously the Russian variable in wheat. If Russia invades the Ukraine, what happens to their wheat and oil and natural gas exports? The market's going to look at that. You had a laugh today. I did. I was watching the UN meeting as Russia's amassed now 120,000 troops on the Ukrainian border, and they're blaming the United States for inciting a problem. Is there something nutty here with the Russian people? Who believes this nonsense? And of course, China, hey, I'm with you, Russia. And the two of them didn't even want the debate to go on in the UN. You got to laugh at it because they'll be at each other's side. It's like Iran doing business with Venezuela. The cast of characters is out there, and you have to understand what's going on with them. The sad part is the Ukrainian people, what they are going through. But the Ukrainian president keeps saying, oh, it's okay. There's 120,000 there. They're not going to invade. No, that's not the problem. Okay. When we take a look at the S&P, what I'm saying here is you had this big break and suddenly the market's coming back up and you're gaining, as of this point, even with the market down tonight, 1.5% off the low from last week. When we look at a daily bar chart, you came down, you did a bit of consolidation here, and you popped to the upside. Okay. That pop has created a pattern of higher lows and higher highs. This swing line should be taken and put here. I just didn't do it. I missed it. Because now you're going higher highs, higher lows. So you'll say, well, that's bullish. It is if you're over the 18-day average of closes. Let's put the moving average on. The 18-day average is in red right here. You've got the combination of the 100-day and the 18 staring you in the face. I contend that the pros, people that got caught on this break, that is a big number that they want to come out at and say, I made back some of my money, I want to get out. I've seen this in my career, and people often do that. Now, on the way back down, we have to ask ourselves, since the trend is up but the bias is down, will we see more support at the 200-day moving average of closes? I think you'd agree that became, right through here, a number that the market started fighting against. Could it go down? Can it get over it? What's it going to do? When you put with that number the Bollinger Band, and you start seeing what happened right here. The market had gotten ourselves, what was it, 1, 2, 3, I think it was 4 days under that band. Then it starts moving to the right-hand side. And it's rare you go beyond 5. You'll hear me say that traditionally all the time. As the market does that, now the question is it going to latch onto the band and have another leg down or not? That's the hardest thing to know. I'll show you a few things here in a moment. So the battleground's shaping up right here, and you get your pop today. So I contend the pros are going to look at that number, those two, and be looking at those. And momentum, you never did embed. You got oversold in this market. So as it's working up, it's still not overbought. I still say that'll be a resistance area for the market right now. Nasdaq, same identical thing. In the Nasdaq, a little different because you had an embedded reading. Now, if you've taken my enhanced Bollinger Band course, you learn when you get these numbers with the slow stochastic and you start embedding here. Embedding means you're staying under 20 for several days or more. When the red line pops over 20 on a closing basis, 21's the number I want to see. I think you're going back to the closest main moving average. You'll hear me say that over and over. I feel pretty good about those type of calls. That does not mean you're in an uptrend. You've ended a downtrend leg. So I want to go on record. We ended, for whatever period of time, this downtrend leg. It doesn't mean it can't resume and attack that again. This leg of it ended with the action today. Same in the Dow. Higher lows, higher highs, again, never embedded, but you're now fighting all that important moving averages. You did have the bearish crossover I prepped you for. The 18 got under the 100 when? Just now, tonight's action. Didn't do it on the close on Monday. Now it's doing it. So that's a pretty stiff resistance point in the market. The Russell's still the weakest, but it lost its embedded reading, and you got to be out of the market when it does that. So on the close today, and you had a chance because while it was 2025, it broke after the 3 o'clock time frame in the 4 o'clock, and then it came back. And tonight you're down a little bit. This is more where the market was trading, and traders could have gotten out, but they should have lost. I think they sold the market here. I certainly was telling traders about that, and definitely wrong. Not right on the trade. In the VIX cash, we have a market that actually has lower highs, lower lows. Remember what I've been telling you? I think the pros went short, as they have traditionally done, in my opinion, against upper Bollinger Bands looking for these lower averages. It's not uncommon when you're writing calls, because that's what you're doing, betting on that the market gives you slippage. It doesn't happen that much on the puts when you're in a range of, say, 12 to the 15, 16 level in the VIX. And go back and study it. You'll see what I'm getting at. Here they got caught. Dead wrong. But if the market's going to fall back, and what I said will happen, is they're going to be able to come out, but they're going to have to take a loss of sites, of types, against that 18-day average. And I think I was right on the money in that idea. But they're wrong. In the T-bond, what can you do when you go sideways like this? I don't see much that I'd want to do. Just every day now against the 18-day averages, the market's doing this. So are we going to raise the rates? What's the curve yield going to do? How aggressive should we get? Maybe we should wait for the jobs data that's going to come out on Friday. We get the JOLTS report this week. We typically don't get the JOLTS report. How many ads are there out there for people in the same time as jobs? Oh, there's a lot of things. That's what's going on. That's just what's going on in the market right now. The market's contemplating. You've come back up in the 10-year notes, but while you've got the trend up, the bias is down. You're under the 18-day average here. You're literally on it, not doing much. And in the 5-year, you'll see you're down under it too. As for the dollar index, when you got up to the upper Bollinger Band, again, my enhanced course, told you I think the pros are coming out of the market up there, and you got a nice little correction. And the flip-flop in the eurocurrency, you get down to the lower band, I'm looking for the bounce away. It all has to do with putting together Bollinger Band and slow stochastics. In the British pound, Boris Johnson's got more lives than you can imagine. So the report came out, and it sounds as though Ms. Gray, Susan Gray, wrote the report. It doesn't appear that she's criticizing him for the parties. She's criticizing in a major way his management style, what he's done. That he can beat. He can't beat in the eyes of the public if he's partying when everybody else is not supposed to be. I think the English people will forget of him for bad management style, and he'll clear the deck. We'll see. Now, the next step coming in is the Bank of England. There's talk that they're going to get very aggressive, now at this meeting that is coming up. So is that going to help or hurt the economy? See, that becomes the big question. Typically, it hurts the economy. You saw what happened in the U.S. as the stock market sank when they're starting to talk anywhere between 3 and 7. Now the number's up to 7. 3 to 7 interest rate hikes. That's what we're now talking. And back on the table, people are going, oh, that half point in March. You better have some really powerful economic numbers, because if you do all that and you don't have those great numbers, you could put this economy in the toilet. You got to be careful. Well, in the pound, you're still fighting all that. But the market is oversold. It has hit its downside target. I see resistance up at the 100 and the 18-day average, but I don't see a bargain right here. In Bitcoin, the stock market came alive, so is this going to come alive becomes the big question. When you lost the embedded reading back here, I was looking for a quicker move to the 18-day average. This is still very bearish action because it's struggling to get up to that number, even with the headwind, or tailwind, I should say, the tailwind of losing that reading and momentum trying to push the market up a little bit. Not good. Brent versus WTI, we've got April versus April right now. They keep getting to this 18-day average of closes and failing there ever since we got into the beginning of December. Look for that pattern to stay until it's no longer valid. When we look at the Brent, you've got a pattern here that is difficult. This big break on this outside day down, and as you can see right here, you took out that low. You had an inside day. What did this day do? That took out that day's high. When that occurs on my work, I have a target of the upper Bollinger Band. You're also embedded. Until you lose that embedded reading, I'm going to stay with what I teach. Same thing going on here. And the market is staying up and still embedded. So it hasn't lost any of that momentum. Heating oil did get up to the bands right through there. It also had, I'll show you here, the outside day down. You set up was this the outside? I know the others were. The low here is 255.65. No, just a higher high and a lower close, and then it came back and just kept going. You didn't have the outside day there. I love those outside days. They're a high probability chart pattern. And in the natural gas, how many days now over the upper Bollinger Band? You've caught people here. But remember what we were talking? Is this a base or a top? I think I said that to you about a week and a half ago as we kept doing this. I said, we're going to look back at this, which way, and I know what I said. I said, we're still in winter. This could be a base. Could be. Not that it is. Well, as it turns out, it is a base, and the market has moved up away from that, and that's basically what has gone on. And, of course, now President Biden's trying to get Qatar and other countries to help give Europe more energy if they need it. There's a big problem, Joe. They don't have it. Qatar's got their natural gas, about 90% of it, on forward contracts. In other words, people own it. The spot market, they take 5 to 10% for. Okay? What the trick is to get the traders that buy these contracts for trade houses in Europe to not sell that oil to the highest bidder somewhere else. That is what Europe has to do. That's their problem, not yours, not Qatar's. That's Europe's problem. They should deal with that in a major way. We talk about this. We write about all this stuff. I just don't pick it up. I read our people writing this research, what's going on. We cover the energies, the grain markets, interest rates, the stock indices throughout the whole trade day. And it's not just me. There's a whole group of people. I don't even write for this. I do the videos for my subscribers. I think you'll find this phenomenal. The oral commentary from the Hightower people, David Hightower, great. You'll hear other people coming out, Jared and some of the people, ethanol traders, dairy traders. You'll hear all this coming through there. And if you miss it, it's not a problem. It's archived in our trading software. So how do you get it? It's simple. It's free. Give it a try. See what we offer people to trade with us. How do you get this? Go to our website under free offers. Give it a try. I'm Ira. You have a good day.